Thank you very much for joining us in today's main event, the Fintech panel. Before we begin, I want to highlight that we have 3 poll questions you can answer on the right-hand side of your screen where it says SABF polls. Please feel free to provide your input at any time, as well as use the question and answer tab if you have any questions. Now let me introduce to you our moderator. Fintech has rapidly become one of the dominant growth industries in Africa. We have the incredible fortune today to learn from the past and gain insights on the future within this space. It is with great pleasure that I introduce our moderator, Kofo Agbaje. Kofo is an investment professional from Quona Capital and is based in Lagos, Nigeria. Her experience spans the financial services and technology sectors. She earned her bachelor's degree in engineering from the Imperial College of London and an MBA from the Wharton School. Kofo, please take it from here.
Thanks so much, Mike. I don't think the audience want to hear from a VC, so I want to spend as much time as possible talking to the founders and CEOs that we have on the panel today. As Mike mentioned, FinTech has continued to be a significantly interesting sector across Africa, with a lot of funding constantly going into FinTech. And I'm so happy to have a diverse set of panelists for the FinTech panel today. And I'll start by calling each and every one of them to give a bit of intro. So it'd be good if you can give us a bit of info about your company and then specifically state the countries of operations, just so the audience can have a better understanding of how diverse our panelists. So I'll start with you, Tayo.
Hi, Kofo. Thank you. It's great to be back with everyone. Thanks for coming. My name is Tayo Oviosu, and I am the founder and group CEO of Paga. Paga is a mobile payments company, very much like Square or PayPal. And our first country of operations is Nigeria. And we are also launching in Ethiopia later this year. So yeah, excited to be here and looking forward to the discussion.
Thanks, Tayo. Yanmo?
Hi, everyone. Hi, I'm Yanmo. I'm the co-founder and COO at Bamboo. And Bamboo is an online brokerage service. So think Robinhood for Africa. And currently we operate in Nigeria, and we're launching in Ghana in a few weeks, actually. It's exciting.
Great. Benji.
Hey, what's up, everybody? Benjamin here, GSP. So good to be back here on campus, or virtually. And yeah, so founder of Nala. Nala, we do international money transfer from the UK to Tanzania, Kenya, Uganda. And previously, we used to do domestic payments in Tanzania, Uganda. Great to see everyone.
And last but not least, Khadijah. But just to give you an idea, I know she would do a better job of introducing Paystack, which is where she currently works. But one of the things we wanted to do with this panel before we go into the next decade and talk about the possible innovations is just spend some minutes just documenting the success that we've had. I know we started the intro with you, Tayo, but I'm afraid I'll have to start with you again as probably a veteran in the industry to share with us what you think the success has been for the last decade, and as much as possible, try not to mention regulation.
All right, Kofo, thanks again. I mean, look, there's been, across Africa, there's been a lot of success when it comes to payments. I mean, when we started Paga, the word fintech did not exist. And I actually had a chat today with a gentleman who has been leading what is called the National Central Switch here in Nigeria. And he just recently left. And I thanked him because I actually think in Nigeria particularly, the advancement of the National Central Switch has really helped drive payments. In Nigeria, you can send money from one person to another person, instant at the value, right? And you can send millions of naira, right? So there's been significant advancements in terms of the payments infrastructure across the continent. A lot is talked about in terms of what is called mobile money, which we can argue about what does that really mean. But ultimately, what it is in many countries, there have been ability to drive wallets and wallet technology, and that has been really, really solid. So I think across the continent, there's a lot of payments that I think is actually much more advanced than in the US and the West. And I see all of this as the base infrastructure that people like Yanmo can build on to then build an investment product, right? And platform, right? And so to innovate for the next generation of innovation is really going to be around what has been built on the payment rails that is then available for third-party developers to build on.
Thanks, Tayo. And Benji, specifically, what I want you to focus on as someone that is more focused on East Africa, but more importantly, is doing remittance with a more developed country. What have you seen that Africa has done particularly well as you look to expand across other countries in Africa?
Yeah, thank you. So previously we built a domestic payments product in Tanzania and Uganda. What's difficult about, and what I'm excited about as well is I think it's going to get easier and easier for fintech founders to start building companies for the next couple of years. The reason why is right now, as you're building companies, you're literally building everything, right? You're building the engine of the plane, you're building the wings, and you're flying it at the same time and trying to carry passengers and trying to get permission to land at an airport where maybe that airport doesn't want you to land there. And I think, what is hard is a lot of the fintech companies end up building multiple things. So like you build an entire banking as a service platform, you build like entire infrastructure and payouts systems, and then you build for your consumer, right? Maybe a consumer facing product. And that is difficult. So for example, even the switch that we do in the UK, it was way easier to build in the UK versus building in Eastern Africa, because when you go to the UK, you have banking as a service provider. So you just plug in, you build on top of existing rails. So, whether it's modular finance, whether it's Rails Bank, other pieces like this, and then you get access to all this infrastructure. Whereas in the continent, you're building the infrastructure, those rails, and building the product. So I think that's a big difference. I think what's going to happen and what I'm excited about is seeing all these new fintech companies coming and starting to build infrastructure, building rails for other people to build on top. And I think that's a massive opportunity the continent has.
Thank you. Yanmo, I know you guys focus more on investment products, and one of the big successes we've had in Africa, especially in 2020, were a lot of exits. So Paystack, for example, was bought by Stripe, but we also had a lot of companies that became unicorns. So Fari in Egypt and Flutterwave in Nigeria. How do you see those successes either translating into improvements of the capital markets in Africa or in products like Bamboo that I kind of see Fintech 2.0 because the payment and lending?
I think the exits and should we say just increase in valuations generally send two signals. I mean, there's one signal to investors that, that there is money to be made in Africa. For VCs, there's money, you can bring money and you can expect returns. And so for us, for should we say the ecosystem, that means hopefully the next set of founders, when raising seed rounds, when raising Series A, aren't going to have to answer the question of, is there money to be made in Africa? And I think, follow on of that with more money in the ecosystem means better ability to, research products, the R&D products, to have better products. And, you mentioned regulation earlier. It's, more money also equals more leverage as well to, sit down at the table, have discussions with regulators. So I think it's definitely a good foreshadowing of what FinTech 2.0 looks like in the next decade. And it'll be interesting to see.
Khadijah, are you back now? I think she is. It would be good to intro yourself and the country you're operating in. And one question I would like you to think about is Paystack. We see as one of our big successes in Africa in general would be to kind of share how have you seen any kind of ripple effect based on the success that Paystack has had?
Yeah, sure. So hi again, my name is Khadijah and I currently lead product and expansion at Paystack. Paystack is a company that helps businesses accept payments across Africa. And the core mandate is just really how can we accelerate the digital commerce that's happening on the continent. Originally started out of Nigeria and now present and operational in Ghana and South Africa as well. And looking to just add a few more countries to our kitty before the end of the year. to your question, I think if you think about like the success that Paystack has encountered and the effect it has on like other businesses or tech startups on the continent, there are literally some organizations that wouldn't exist if somebody hadn't tried to like figure out how to make payments work, and even better, how to make those payments scale across multiple markets. We have people that tell us that they want to go live in a country, like they want to launch in Kenya, for example. And the question is, when is Paystack going to be live in Kenya? Because we're literally waiting for you to figure out how to make this work so that ultimately we can work. And I think that translates to like growth across multiple fronts. I was talking to a friend of mine about this earlier today. It's like this woman used to like just bake goods and sell to her immediate environment. And if you can only exchange value with the person standing right in front of you, then your business will always be limited. But all of a sudden, you have a presence online. People that you don't even know are like ordering from you, sending you money from like across the states, across the country, across the continent. All of a sudden, there's a ripple effect where you're paying for bigger office space, you're hiring more people, you're like contributing to the GDP of like your country, and that's just like the ripple effect we're seeing across all kinds of businesses, from the tech startups to the creators to people in the art space to large enterprises. It's really interesting, and we're really hoping that this is something that we can continue to maintain as we take Paystack into more countries in Africa.
Thanks. And so one question for all the panelists, and you can start kind of thinking through your answers. This came as an audience question before the panel started, is how have you built trust with customers, and how are you thinking about building trust? And I would like you to think about it more in also customer education. Have you had to do anything in the past, or have some companies that are the Fintech 1.0, as I call them, have they done most work? And with the new entrants in the market, do you find it easier to gain customer trust, launch new products, etc.? Or do you find that there's still the same level of distrust for fintechs especially? And how do you see that moving forward in the next decade as we think about innovation in Africa? So I'll let anyone take that.
Yeah, I think I can go. So for Paystack, one thing that we realized very quickly was Nigeria was a low trust market. And we were in this weird situation where people were literally paying online for the first time with their cards ever on Paystack. So it was anything from what is my card number, what is my CVV, to how do I know my money isn't just going to like leave my bank account and I won't get value. So we had to invest a lot in building trust, not necessarily through customer education, but just living up to the expectation. We had to be in this position where we were supporting not just our merchants, but our merchants' customers, because the promise had to be, if you use Paystack, then you shouldn't have anything to worry about. So if you had a dispute, we would get involved. If you didn't get your goods on time, we would get involved. It was like a very interesting position to be in. But I think ultimately it paid off, because you now have people say, if I see that this merchant uses Paystack, even if I've never transacted with them before, then I can trust that, I'm safe, quote and unquote, which has a ripple effect, because now there's so much more we have to figure out to make that promise true. But that's how we sort of like tackled the problem. It was some customer education, yes, but literally just like giving our word that we will make sure that your money is safe and you will get value, and then doing the hard work of making that a reality. Yeah, that's what we had to do.
Feel free to chime in if you had anything else to add to this.
I think, yeah, I'll go, because so customer trust was also super important for us at Bamboo, especially because we're telling people that if you click buy, we promise you own this stock, and you sort of have to just take our word for it that you own this stock. And I think for us, especially at the beginning, like Khadijah said, Nigeria is a very, very low trust society. So we had to do a lot of not so much customer education, but just letting people know exactly what was going on. So stuff you might have felt was more obvious, you just had to be happy to repeat it over and over again. From questions like, why do you need my BVN? Are you sure you're not going to be able to run away with my money? We opened a physical office location, and we've had people just pop up to the offices just to check that, okay, you're a real company, people actually work here, even during COVID. So something we had to do, for example, is have someone at the gates during lockdown that had a phone number And for the first 6 months of Bamboo, anyone on Bamboo could reach me on my personal phone number. And, people were calling to be like, just checking, that sort of thing. So I think a big part of the customer trust thing is also just having, at least in Nigeria I can speak of, is people wanted to feel like there was a face behind the product. I don't think, I'm not certain that we're yet at this point in fintech where people are happy to just, at least for Bamboo, where people were happy to just give us their money without knowing who was behind it. Did they have an office location? Just who is the person? So I think that's something we've learned, that Nigerians like a sort of physical, should we say, or personal touch to the experience. And that was very, very helpful with customer trust. And then the second thing for us was referrals. Referrals were super duper helpful with getting customers to trust you. People were more likely to believe in your product if they heard about you from someone else that they know and trust. So that was also helpful.
Yeah, interesting. Benji, I would like to know if Tanzania is as low trusting as Nigeria. But more importantly, I know, and some members of the audience might not know this, you were kind of a popular figure in Tanzania before you started Nala. So did that help or not? When you now had a product that you had to, put your face and name and stuff behind?
Thank you. I think it helped and hurt. I think it made more pressure, right? So for context, I used to be a TV host in East Africa. Used to do like local TV shows and then sports shows. And then when you don't know what to do, you like to go to grad school. So that's how I got into fintech. But yeah, so I think it put a lot of pressure because you had to put your name on the line for the product, right? And so when something went down, when a payment didn't go through, people were the first to go online and trash you. So I can go to like my Instagram page from like a long time ago and look at all these comments. People were just like, "Oh yeah, y'all, you suck," like whatever. And we just had to take it. You're like, especially when you're business to consumer. If you're a business to consumer product anywhere in Africa, you have to have really, really thick skin because some of the comments you get told if you take them really personally, like especially what we do as a company is we try to because you work with partners, right? So if your partner goes down, we try to inform our users as early as possible, push notification to them. We try to, let them know via email as early as possible. So we try to over communicate with our users. One thing we did that I think was pretty cool, and we're actually doing again with this new product is we named our customer support Mama Nala, and I was Mama Nala. So
what does Mama Nala mean?
So Nala's derived from Swahili Bantu word that means a beautiful gift. Nala's also the lioness and lion king, and so that's behind the name behind the company, because lionesses actually hunt more than the male lions in the wildlife. And so for us, Mama Nala was more like this caretaker, And so we named the customer support in app Mama Nala, and people would chat with us, so they didn't know they were chatting with me. And so I remember one time I was like boarding a flight. This lady came up to me, like older woman, about like 55, 60 years old. And she's like, "Hey, you're the Fernandes guy. Like you have Nala." And she pulls up on her phone. She's like, "Yeah, we use it. My whole family uses it." I was like, "Oh, that's amazing." She's like, "The best part about Nala was Mama Nala. Like I was speaking to her last night at 11:45 p.m. and she was texting me back and blah, blah, blah." And she's like, "Tell her and the whole support team, like, well done. Thank you so much." And I just was like, "Okay, cool. I'll let her know." But those are the kind of things like we just had to do. Like, we're a tiny team back then. And even right now, what we're doing with our new product is it's still called Mama Nala, but we actually have our faces, our names on it. So people can actually click. And one thing that really helps is when people see my name and they're like, "Oh, wow, I'm actually chatting with the quote unquote CEO of the company," people feel like really special. People feel like there is a personal connection, and they literally are chatting with me. It's not like somebody else is using my alias, but they are chatting with me, and then they feel more confident in the product. So I think it has its pros and cons, but I think putting your name on the line really helps build trust because you also feel responsible for it.
Thanks. I know all the startups, all the startup represented here today, I've either expanded into another market or considering expanding, like Bamboo is. And one of the questions that came in before the panel started was on basically expanding beyond borders, and specifically, I'll read the question and kind of rephrase it to see how you guys might answer it. So the question says, "Fintech is popular among investors due to its low capital structure and the business model's ease of transfer across borders. Do you find that to be true? And if not, why? And what I would like to stay with you, Benji, because you are in multiple countries in East Africa. But also one question I would like you to think about as you answer that is, do you think the kind of fintech hotspots, and by hotspots I mean Nigeria, Kenya, South Africa, and now Egypt, do you think that is changing or that would change? And if so, how would the kind of ease of moving technology across border, how would that help?
Yeah, I think you bring up a very good point. I think the difficulty, I think Africa fintech will be the most funded for the next like 5 to 10 years. Like I believe that very strongly, at least on the continent, because so much is broken, right? The fact that for me, in my perspective, I think payments across the continent is only 1% built. The fact that you can't send money back and forth instantly, even across borders. Think about the amount of trade that's still missing, right? The work all the companies here are doing is super critical in helping that, in growing that. When, in the States, you can send Cash App instantly and like the other person can send it back to you. When trade gets better across the continent, when logistics and delivery gets better, we're going to see a growing middle class that's unseen and unheard of today. And I think that's the opportunity the continent has. So I think fintech will continually be the hotspot, for the continent because so much is broken. And I didn't realize how much more was broken until we got into the space. Because even maybe you have large payout aggregators across the continent we work with. A lot of these international money transfer companies, for example, WorldRemit works with 11 payout aggregators just in Kenya. Sendwave works with 7 just in Kenya. The reason why is because one of them is always down at some point, and you need to provide a reliable service to your customer, or else you lose the trust and they never come back again. And so there's quite a bit that's still broken on the infrastructure side. And then regarding the expansion piece, I think like the Kenyas, the South Africas, the Egypts, and Kenya, South Africa, Egypt, Nigeria will always be places where people look at as like innovation places. I mean, if you look at a comparison in the United States, you have Silicon Valley. You're not going to have Minneapolis all of a sudden be the next Silicon Valley, right? So you're not going to have Zambia be the next Silicon Valley across the continent, and that's completely fine. And so I think you will still have these hotspots, but as I think the population across these countries start to grow, as infrastructure for tech gets better, as policies start to emerge and evolve, you have countries like Ethiopia that I think have massive opportunity to be some of the leading places for investment in the next 5 to 10 years across the continent.
Thank you. And that actually leads me into my next question, which is for you, Taya, because you mentioned you're moving into Ethiopia. How do you as a CEO kind of determine what market to move into next? And how do you see regulation? I have to bring regulation in now because I kind of like it to be a lot. If we leave it till the end, we will never get to it. So how do you kind of look at that and view regulation as you move across borders to Africa?
Yeah, so at Paga, our business really is in 4 segments. One is we have a consumer direct offering, which is like a Venmo or a Cash App that you can use to send money to other people, pay bills, and pay at a store, etc. Used to pay online. And then we also have a proposition for sellers, so businesses who are looking to sell their goods and services, whether in a physical store or online, as well. And then an agent business. And then the last bit is opening up all our APIs to the innovation of third-party companies, actually all the companies on here, right? And the rails we've opened. So as we think about new markets, we will go into markets with one or multiple of these pieces into new markets. And every market is quite different. And a lot does have to do with what's the regulatory landscape look like? What licenses do you need to operate? How lightweight could it really be? Right. And so, for example, Ethiopia, where we're launching next, actually our product has been built out of Ethiopia. So we've been in Ethiopia for the past 8+ years, and we have a team of about 60 people on ground in Ethiopia. And so we with a bank, and we're partnered with the bank, and we've jointly gone actually to the regulator. And so we're looking forward to hearing back from them and launching our business there. Our team is very excited about the fact that they've been building this product for years in Ethiopia, but not being able to use it outside of the office, right, in Ethiopia. And about new markets is actually we're looking for large markets or markets that we think could become very large in terms of where we're going. We don't think necessarily, when we talk about going across Africa, and I guess to your point of hotspots, I would love Paga to be in every country, but I don't know that we would necessarily go to every single country, right? but I definitely want us to be in the biggest countries that where the opportunity exists.
That makes sense. So one question that just came in, and I want to kind of build off of Paga, the growth you guys have had in the 9+ almost, and maybe it's even 10 now that you've been operating, is we still keep saying cash is king in Africa. This is still true in Nigeria, even with the constant rise in, mobile payments. Do you see us close to moving away from that? And, if not, why? If so, what are you saying? What do you think? Everyone in the panel, but also the audience, what could we do to kind of move and the country from to enable more international card payments?
Yeah, no, look, the number one mission I personally have is to end the reign of cash, right? That's what got me started on this business. But look, it's not only about Africa, right? Japan, 80% of transactions are in cash. That's shocking, right? For as developed that country is. Germany, as developed as it is, about 82% of transactions are still in cash. And I remember sharing the statistics with the chairman of McKinsey Africa, and he was surprised. And until the day that him and I were in a taxi in Munich, and they refused to take our card, and I was the only one that had cash, so I had to pay. But the issue in Nigeria, I think actually the way Africa is going to go cashless, and is that ultimately, companies like us are bridging cash to digital. So in our agent network, 27,000 agents across Africa, 17 million people go to those agents, give them cash, and the agent is performing the transaction digitally, right? So we're bridging that gap. But ultimately, I think the way African countries are going to go digital is crypto. So countries have to, at some point, develop their own cryptocurrency and move completely and end the reign of cash. Now, and that is why I think it's unfortunate the position the regulators in Nigeria especially are taking, but not just Nigeria, regulators across Africa are taking when it comes to crypto. And I think but that train has left the station. China is going to be all digital shortly. The US is already working on the US digital dollar project that I'm advising on. So I think there's a lot to do. I think Nigeria's already built the rails and the potential, and more people are more comfortable. Right. I remember, when 10 years ago, I wear this shirt to the airport and people ask me, what is Paga? Nobody asks me what is Paga anymore. People know what digital payments are, and people are more comfortable with it. And to your question of trust, because they've seen it work one way or the other, there's more comfort and more willingness to try. Right. So I think over the next few years, we will see more and more people adopt digital wallets like Paga, whether they're banked or unbanked, and using it to do transactions. And I think eventually crypto, and I think that would start driving move to ending the reign of cash. Yeah.
Thanks, Tayo. What you just said now about crypto, I have a question for you, Yanmo, because as most people in the audience might know, and the panelists, crypto is huge across Africa and in Nigeria. And one of the issues people have now is regulation. And I know you recently had some, I don't know, what would I call it? Kind of initial conversation with the regulators in Nigeria. So how do you kind of see regulation with this next decade of innovation and the very bright companies we're currently seeing? How do you see that either changing in the future? And with the new set of investment tools that companies like Bamboo are providing, and new exposure to crypto, how do you see that either changing our move away from? How do you see that affecting the economy?
Hi, Kofo. I'm losing you. I lost you slightly at the end. So if you could just repeat the end, what the last bit of the question was, that'd be awesome.
Yeah. So how do you see tools like Bamboo that allow people to invest in as much as possible, move away from holding cash? Because you want to invest in crypto, and you want to invest in Amazon, etc. How do you see that enabling the move away from cash is king economy? And how do you also see yourself working with regulators as you move into providing different asset classes for audiences?
Okay. So I think I'll start with the first question, which is around platforms like Bamboo helping us move away from cash. I think I think generally fintech products help us move away from cash, just in the simplest way possible. Because if I can move my money easily and if I'm able to move my money easily and I'm able to do everything I need to do without ever having to withdraw money or ever having to go to an ATM, then I think that's the most ideal. I think what we need to do is make it cheaper, right? Make it much cheaper right now for the poor people in society to be able to go cashless. It's something I talk about when we say, oh, get out of the naira, for example, when we're talking about inflation and devaluation. That for the poorest members of society, they actually can't afford to get out of naira because even the small FX spread between buying and selling dollars is too big for them. So and those type of things come in when you're trying to get more and more people to invest in other asset classes. I think crypto is great. I think crypto is great. On Bamboo, we actually were about to list it as an asset class on Bamboo before the regulators essentially said we couldn't. And hopefully it's a position they revise. I think, like Taya said, the train has left the station on that. I think it's one of those things where in looking at what the next decade of fintech is going to be, I think in working with regulators, I think both parties are going to have to come to the table and realize that, there must be a quote unquote two-party solution to everything. I think one needs to happen, especially as fintech, companies like Paystack, Paga get bigger and have more leverage, is that then they're able to they have more leverage to bring regulators to the table to move the problems forward. So hopefully our regulators position, because what we've had now, for example, is where a situation where regulators don't say let's speak, or they don't say we're thinking through this problem, we're thinking through new regulation for this industry, let's all come together and figure out what it should be. The way, at least in Nigeria, our regulators say we'd like to talk to you is they ban your product, and then you're forced to come to them. And that's terrible for the industry, it's terrible for the ecosystem, it's terrible for investor confidence, for user confidence. And so hopefully the next stage is, regulators being more open to talking. At least in our case, that seems to have been what happened.
Thanks. One question I want to ask you, and Khadijah, I want you to start thinking about this as well, is what do you think about partnerships in general? So Taya mentioned, for example, one of the things they've been able to do is open API many companies to be able to offer payments. And as Bamboo, I'm sure you need to have a lot of banking partnerships now that you're looking to expand beyond Nigeria. How do you see the different stakeholders in the economy, for example, also some of the fintech that you might need to work with, especially regulated? How do you see them either coming together or not currently as you work in Nigeria? And how do you see that impacting the next decade of innovation that we have?
For our business, partnerships are super important. We couldn't exist if payments hadn't already been sorted to some degree. That made it, or would have been a lot harder for us to exist if we couldn't easily move money abroad. It'd be a lot harder for it to exist if companies hadn't already figured out the KYC and we couldn't get plugged into the Nigerian bank verification system easily, or the systems get an NIN number. So for us, partnerships are very, very important. I think partnerships also help you get started very quickly, especially in regulated industries. If you had to wait until you could get a banking license or a broker license or a fund manager license, or whatever other license you needed to exist, for a lot of companies, it would just be virtually impossible. Startup costs would be too high. So I think partnerships are important. I think they're going to become even more important as infrastructure continues to be built and infrastructure continues to grow. And, as the industry and more companies become more intertwined, it also becomes easier and I think that more helpful in terms of the discussion around the regulators and talking to various stakeholders.
Thanks. So, Khadijah, the same question, but specifically for Paystack, since you guys have been focused on expansion in the last 6 to 12 months, how have partnerships helped, or in some cases, maybe hindered your business? And have you at all had any brush off with banks in any of the countries that you've been working in?
I think for us, like payments is partnerships, right? Because essentially what you're doing is you're connecting a buyer with a seller, and you need to be able to pull money from wherever the buyer has their money, whether it's a bank or a wallet or somewhere else. So you're essentially partnering with those people for starters. And then there are different kinds of payment methods. One of our commitments to merchants, for example, is we'll make sure that people can pay you however they choose to pay. So you don't have to worry about integrating to like 500 partners, right? There's like cards, QR, mobile money, and like we basically have to work with all of these people so that you have a complete and functional payment service. So partnerships is really, really essential to everything we try to do. And I think there are two things that I've observed over time. So in the early days, you literally need somebody to take a chance on you, right? Because people are like, what is a Paystack? Like, why should I work with you? And literally, it's like a random account officer in a bank in Nigeria that's like, okay, I would like, take you to the ED of the digital banking team and see if they will give you an approval. Do you see what I mean? So when you start off, it's probably going to be pretty tricky to convince any bank or like the bigger players to connect with you and allow you integrate to their systems. But over time, as you build what I call street credibility, or people know more about your business, then those conversations are easier. And as you go into any new country, you still have to go through the cycle. Like in South Africa, we had like several presentations with multiple banks before settling with a bank partner, for example. But I think it's one of those things where if you can get past the initial barrier to like the initial stages where you just need somebody to work with, just somebody to get started, then you're good. And then over time, you show traction and people just become more comfortable with working with you. But yeah, I would say like partnerships are essential to everything that we do. And it's become way easier over time to convince people to work with us. And like finally, like we really have to work with partners because we want people to be able to pay you however they choose to. So that merchants can get ultimate value. That's it.
Yeah. I don't think Paystack needs any more introduction after the year you guys have had. So if you still do, let us know on the panel.
You'd be surprised.
Wow. A question just came in on fees, especially related to M-Pesa in Kenya. But Benji, you do P2P and you also do remittances. So as much as I want you to comment on M-Pesa fees, specifically if you have any info on that or opinion on that, I'll also like you to comment on how you see transaction fees doing P2P, but also helping with remittances into East Africa.
I hate transaction fees. It's part of the reason I try to start Nala is I think transaction fees are stupid and I don't think they should exist. I think businesses should try to figure out other ways to make money off of consumers. But the reason why I think it's ridiculous is the following is it bothers me a lot. And this is one thing we always think about as Nala as a company is why the lowest income region in the world get charged the most amount for fees, right? And then it's inversely proportional. So for example, the less you send, the more expensive it is. And a lot of people are sending smaller amounts in more frequent, transactions, right? So, P2P fees across Eastern Africa is ridiculous. In 2020 report from GSMA says just the amount of money transferred within Eastern Africa is something like $321 billion, which is insane. That's mobile money transactions. And if you just look at the revenue that a lot of these large entities are making from this, some of them obviously have government stake, such as Kenya with Safaricom, but most of them are foreign-owned entities, right? And so you have a lot of these foreign-owned entities that are, like large multinationals that are in the market that are doing a lot of these things. That's what bothers me is because I think it should be cheaper. I think it should be a lot more cheaper. With international money transfer, Africa is the most expensive place in the world to send money to. Here's some data about this. So for example, to sub-Saharan Africa in 2019, $48 billion was sent from the diaspora abroad. About 3.5 billion of that was lost in fees alone. And what's crazier from that statistic is it sounds like, okay, 48 billion was sent home just to sub-Saharan Africa. This is excluding a few countries in the region. And what's crazy about that is 80% of those transactions still happen at physical stores. This is somebody going to a Western Union, a MoneyGram, and this is of the known money that's being sent home. Now, there's a whole world of unknown money. That's money carried on planes, money carried with relatives, or people exchanging, like, when Nigeria and CBN ban, like, try to control a lot of the remittances happening. They basically, what it created was a hawala system to be built manually, where people would exchange money, find somebody in the States who has US dollars, and then you call them, and then find out somebody locally who's going to give Naira in the market at the best rate. And, that's part of the reason we're trying to carve the fees down, and shave them off with technology. And I think that's an opportunity also crypto has to enable this. The challenge with crypto is a lot of
So I want to kind of dig deeper into the fees question. And Ty, I'm going to go to you as a CEO for over 10 years, because you do have to balance charging your customers with running a business that either is moving towards profitability or, has a clear path to profitability. And in order to do that, a lot of us talk, VC, Fintech, etc. about technology and how cheap that would be. But the truth of the matter is, in most of the markets that we're in, as Benji just said, there is still the need for a physical element. Yanmo mentioned it, that they have a physical office. And because people want the touch, they want to know there's someone there if there's a problem. So as a CEO and someone that has been in the business for a long time, how do you kind of manage I don't want to charge my customers too much. I need to think about profitability for my business. And as much as possible, the kind of customers I'm serving require a bit of tech and touch.
Yeah, no, it's a good question. I mean, look, I think my personal view is that, we should let the markets work. Right. And this is probably one place that I've disagreed a lot with the regulators in Nigeria, or in general government in Nigeria, because there's a view that by just reducing prices is what, gets people. And I disagree. I think, the time we've seen at our agent network, as an example, when you go to our transactions, they price to the market based on what they think the market is willing to bear. Right? No matter what price we put it at, no matter what puts it at. So ultimately, over time, as services, we all know the economics of this, right? As services become more available, people will be willing to pay less, right? I mean, they'll want to. But right now, people are willing to pay for a service offering, and so I think to enable businesses to thrive, I don't think government should be regulating pricing. That said, companies will price market bears, and over time that's going to go down. So you also have to build your business. What I take from what Benji said, and I agree with, is that you have to build your business not to be depending on transaction revenues only, right? Because the long tail of transaction revenues is it's going to zero. So how you build a sustainable business around that fact. And we've had to do that. Our pricing over time, but we regulate it. There's a 62-page document, a guide to bank charges in Nigeria. Have to abide by.
Oh wow, interesting. Khadijah, I would like to kind of ask you, related to payments. I know you charge merchants, and depending on the API connection, you also charge some of your partners. But more on kind of the new push towards digitization that COVID has forced in, a lot of new local and global trends has actually forced. So, like you also mentioned, a lot of merchants would like to use Paystack because they want to expand beyond borders. What are the new problems or high priority problems you're still trying to solve for your customers?
Wow. I think one thing that just became super apparent to us was how much of a problem reliability has become. I know that people generally aim for like 99.999% uptime and availability, but in like 4 years ago, that 0.001% downtime was like, 10 transactions. Now that's literally translating to thousands of transactions. So we can't afford any outages, and suddenly we're presented with this scenario where we're working with partners, we're dependent on them for a number of services, but ultimately there's a service level we have to be able to guarantee to our merchants. So at the beginning of the year, that just became such a key concern for us, and we had to like figure out how to make sure we have as little downtimes as possible, or just anything that would impact our ability to process payments on behalf of people. That's one. The other thing is we're in an interesting position now where merchants just sort of look to us for anything related to how they can succeed in the businesses they're trying to do. So we've done everything from photography lessons on how to take the best pictures for your online store to use our storefront products, to advisory services on how to manage your taxes and do your record your accounting properly in your books. So it's just literally now like, oh, I need to hire like a head of customer service, Paystack, can you help me? And we're like, okay, we'll put the word out, And this has just sort of driven a number of other experiments we're running. Like we have the Decode Fintech newsletter where we just share like hot topics in the fintech space, and we can share like information from our key merchants and some of the opportunities they are looking to fill. And then like all the webinars we have on how people can build with Paystack or how you can just run your business better, whether in Nigeria or Ghana or South Africa, or if you're just looking to scale, some of the lessons we've learned, some of the mistakes we've made, and some of the ways you can avoid the same mistakes, So yeah, it's like new problems. Like we just wanted to like help people accept payments, but now there's just all these other things that have become part of our reality, but basically doing our best to figure out how to solve those problems.
Thanks. I particularly like your ad or Paystack's ad on how to become an internet storefront or how to make your storefront internet, which I've seen across parts of Lagos. Similar question, Yanmo, in terms of what are the problems you're still trying to solve? I think we haven't discussed this a lot in this panel in terms of trying to help the kind of low members of the pyramid with wealth generation. And I think that's kind of the end goal of platforms like Bamboo. What's still the biggest kind of problem you're trying to solve for us to get there, whereby we're no longer talking about payments and lending, and we're not talking about wealth generation in Africa?
So for us, our goal at Bamboo is to give everyone in Africa access to global investment options and access to real returns. So for us, our overarching goal is access to above inflation returns. So the first key problem, especially for local assets, is as every day inflation rises, our mission gets harder because they're just less and less investment options. They're giving above inflation returns. And then just generally, a key thing is still getting the access here. It's very easy. If you're in America, you want to if you live in the US, you can invest, you can say you can invest in anything in the world, as far as possible. But in Nigeria, even for super rich people, they're still having to go to asset managers or go to brokers outside the country, not within the country. So for us, there's an access problem and there's an affordability problem when you bring it to the lower end of the pyramid. And for lower end of the pyramid, it's affordability and it's education. Now we're doing access to equities, and equities should be equities are, in looking at various investment options, equities are relatively easy. You're sort of saying, this is a company. If you believe in the company, buy the stock, and the stock will, the stock will appreciate. But there's still so much education to do there before you even start going into trying to get people to invest in options or derivatives, or even on the basic thing, getting people to understand how compound interest works and why it's in their favor to start early. But I'll say I don't think it's just an African problem. Even in the US, less than half of their population invests in equities, and even there, a lot of them just have forced 401k plans or those kind of things. So I think we're making strides, and for us, the next decade looks like really, really focusing on education across the board, and then trying to get as many investment options as possible into the country, and working with as many partners as we can to make that possible.
Thank you. Yeah, thank you. Benji, a similar question on what problems are you solving for your customers? But one of the things you mentioned that I think might also fit into that question is on the amount of payout partners that the likes of Sendwave would need or Remitly would need in Kenya. Is there anything we should be doing to either unify those payment processors? And as someone that works in payments specifically in East Africa, what are the biggest problems you're still looking to solve for your customers?
Yeah, so some of the biggest customers in fintech, some of the biggest companies in fintech that solve problems in East Africa, frankly, don't work that well in East Africa. I'll be honest. We use some of them, some Nigerian companies that operate here in the region. I'll be frank about them. They don't work. to the way that you expect them to work. And that means you can't build reliably. And when you can't build reliably, you lose trust at the end of the day with your consumers, because the consumers know your fintech company. They don't know the payout partners you're working with, right? For example, in one transaction for money transfer, you have a KYC partner that needs to get paid, an anti-money laundering partner that you verified the person you're sending money to, an FX partner that you're going to move the money across the borders with, a payout partner locally, and then yourself. Across all of these, there's margins that need to be shared, right? And even with the payout partners, a lot of them need to be consolidated because there's a lot of them, and some of them don't work great. I think with better software and people building better technology over time, I think it will get better and will become more reliable. I think you are starting to see a large growth of these, Pan-African, payout providers, whether it's the MFS Africas of the continent, and people that this is their main focus, or the TerraPays or the Tunes. That's what they solely use. That's their bread and butter. With payments locally on the local side, one of the things, I was talking to a friend who runs a business to consumer cross-border payments company on the continent. He was telling me a majority of his requested volume is business to business. And that's what we've been seeing as well, like from international money transfer, and like that's something that I don't think is being served as well. Is you have a lot of diaspora members or people who live in other countries that run businesses back home, and they use remittance-based apps to try to control that. And these people are moving a lot of money, not just like 200 pounds here and there. They're moving thousands and thousands of pounds. And I think there's a massive opportunity to serve those customers well, because they are people who are running these businesses, and the volumes that can be moved there can be massive over time. And then when you get large volumes, that's when you can negotiate better FX with providers, right? If I go today and I say, hey, I'm only moving 2,000 pounds a day to, let's say, a large bank, they're going to give me really bad FX. But somebody who's moving 20 million pounds a day, and they go to, let's say, a bank to negotiate, they're going to get an amazing FX, and that's how they can, but they still offer the same rate maybe that you do. And I think that's where I have a slight problem with it. It's not how much you're earning, it's how much you're earning relatively to how much you can get. So I think with the payments side in Eastern Africa, I think with better regulation, Uganda, I talked about Uganda, I was just there 2 weeks ago. They have a whole new payments act for fintech companies, and it's really cool to see governments like that channeling that from a central bank network.
Thanks. Tayo, as we kind of finish the panel, the question on my mind is it getting harder or easier for fintech in Africa? And as you guys all think about expansion, there's something Benji said about just how many players across the value chain. Should fintechs be looking to expand across the value chain, and as much as people trying to work on reliability? Or as some of the questions that have been coming in, should it be product expansion? Because there is issues with B2B, just like there is with P2P, and you could argue there isn't enough experience. So how do you kind of see, the decade shaping up, and is it getting easier or is it getting harder?
Yeah, I definitely think it's getting overall easier, right? And I think it's going to only get easier. And there's a lot of collaboration going on, right, between companies who are offering their services in the fintech space. I actually think what is exciting for me is that we've built a lot of infrastructure. And so on one hand, while we're serving our customers, our direct to consumer, or our businesses who are SMEs, and that's a big problem we're trying to solve. How do we digitize SMEs as well? We also can partner with people that offer the infrastructure and let the next generation of innovate around the other service offerings. So rather than having to think about how to build that plane, to use the analogy Benji started with, right? They just need to, they know the plane is there for them. Are we actually offering, right? And what product are we serving? And I think that's really exciting, because I think now that payments is generally solved in some ways, there's still a lot more to do, right? But at least it enables innovation for a lot of people.
Thanks. I think one question that came in is an expansion, and we haven't touched at all on Francophone Africa or South Africa or Southern Africa. So any expansion plans, anyone on the panel, in moving either to Francophone Africa or Southern Africa, and how do you kind of see your business model changing as you expand to any of those regions? I think we have about 3 minutes left but anyone can take this.
So I'll talk about Francophone Africa since we're already in Southern Africa. Paystack is planning to launch in Cote d'Ivoire before the end of the year. It's pretty fascinating because we're in this position where everything has to support like multiple languages now, namely French, translating all our merchant interfaces, API documentation, hiring people that can speak the right language. So that's like really interesting. But yeah, there is that. And in addition to that, we're also opening up in Kenya before the end of the year as well. So yeah, fingers crossed.
Fingers crossed. Anyone else on the panel? Any plans to expand to either Francophone or Southern Africa in the next 6 to 12 months? Or maybe you want us to read it on TechCrunch?
Yeah, well, I'll say something really quickly in short. So on the compliance side, I think Francophone Africa do an amazing job. So for example, if you get an electronic money license in one of the countries, you have access to all 7. I think that is really fascinating. I think that's something that I hope to see across many African countries, because that's what enables a growth of different companies to be built.
Great. I think we're done, or we're almost out of time, but before they cut us off, any last statements from anyone on the panel on either challenges or how excited you are about the next decade for Africa and fintech?
Yeah, I will just say to leave our audience with that, look, there's a lot of exciting things going on the continent in fintech. Get involved, come to the continent, and there's a lot to do. So thanks for being on.